Good afternoon then everyone, as we are at the end of another week of trading on Friday the 27th of October. It's been a pretty choppy week, hasn't it? It's not been great trading conditions over the course of this week. We had to start the week. We had some employment figures out of the UK. 7 o'clock. It was supposed to be last week. Did get it this week. 4.2%. It's actually ticked down from the previous of 4.3, but slightly adjusted. No, it didn't really have too much of an impact in markets, to be perfectly honest. Inflation prints out of Australia. We did have some comments on Tuesday from the new governor of the RBA, Michelle Bullock, did suggest that inflation, she did say that if inflation continued to remain high or did push higher, that they would hike interest rates again and open up the door to a further interest rate hike or a retightening of policy in the in Australia. Then we come into some inflation figures, and then they are higher than anticipated. The monthly CPI indicator higher than anticipated, up from 5.2 to 5.6. We can see the headline inflation print consensus 5.3, actual 5.4, and core as well was higher. So higher than anticipated inflation figures across Australia, plus some PPI figures, medium impact data releases, but PPI figures up 1.8 in terms of the previous quarter. So inflation beginning to rise, or slightly rising a bit in Australia over the course of Q3, which is somewhat of a cause for concern for the central bank, who have not hiked interest rates for a good while now. Main focus of attention was really the back end of this week. Bit of the Bank of Canada out on Wednesday. Didn't really do too much. Inflation's not rising there. Unemployment is rising. GDP is not fantastic. So it's not really a situation where the central bank would look at hiking interest rates. Again, stuck to the script of, if we will be data dependent going forward. If inflation pushes higher, we can hike again, but for now we're not. Same kind of stuff that a number of the rest of the central banks are saying as well. But data in Canada does not suggest that they will need to. Data in the US, though, we got durable goods orders and GDP figures. GDP 4.9% in Q3. Durable goods orders for September 4.7, both massively beating consensus. So certainly does not make for recessionary prints in the manufacturing sector or growth figures for Q3 and in the month of September. So is a situation where the Fed can continue to remain hawkish, or at least talk hawkish. As a situation which is likely to keep the dollar somewhat supported in the medium term, you would have to imagine, as we had the ECB who have said that interest rates are at a sufficiently restrictive level in order to return inflation back to their 2% target in a timely manner. But they also did add a statement that if interest rates are at a sufficiently restrictive level, if they are held for long enough. So they are now the latest central bank to shift to the higher for longer phase, but ultimately they are done with their interest rate hikes, you would have to imagine. Fed, on the other hand, core PCE rises 0.3 in September. Obviously it can't be a flat 0.2 every single month, so not too much of an issue, but still 0.3, ticking back up from the previous month of 0.1. Personal income down slightly, but personal spending up substantially over the course of September. So strong economic data from the US this week. Really kind of makes for an interesting move back end of the week. Certainly today we can see the US dollar is selling off as of now. Whether that holds into the close, obviously we don't know that question yet, but you can see the US dollar, it's been all over the place really. You look at your Aussie over the course of this week. It was up on Monday, down on Tuesday, up on Monday, should I say, into Tuesday, up, slightly up on Tuesday, then down on Wednesday, sideways on Thursday, into, what am I even talking about? I'm looking at the week before. Talking about up on Monday and Tuesday, down on Wednesday, into Thursday you're back higher, and then into Friday again back higher again. But same thing across the week before. So similar pattern over the last couple of weeks. And your Aussie, you look at your Kiwi, started the week push higher, chop sideways on Tuesday, down on Wednesday, back up Thursday and Friday. Same thing with euro dollar. Euro dollar starting here, a bit of a rally in euro dollar to begin the week. Tuesday sold off quite aggressively, into Wednesday sold off again, pretty sideways yesterday, and now is pushing back higher. And it's just the same story across all these US dollar pairs. Up down, really a lack of clear direction across across the US dollar this week. Dollar yen, interestingly, that was back below 150. You see this big spike happened on Thursday morning, yesterday morning, about 7:45. Big spike down, kind of 100 pip swing in the space of a minute or two. No chatter of intervention. Just seems a bit of position unwinding, and now you are accelerating to the downside in dollar yen. Potential for the Bank of Japan to tighten monetary policy next week, but ultimately is that going to happen remains to be seen. But we're back below 150, so it removes the need for any intervention chatter as of yet, or as of now, should I say. If that gets back above 150, starts targeting these highs again, maybe we'll consider it again. But as long as it remains below 150, Japanese authorities won't be too alarmed. But dollar Swiss the one with clear direction this week. Dollar Swiss is pushing higher. Dollar CAD to begin the week had a bit of clear direction, has chopped sideways in recent trade. But dollar Swiss, the one currency pair with clear direction, which says to you clearly it's a Swiss franc move lower. In terms of reasons for that, I mean, the Swiss National Bank done interest rate hikes. We can put that down as a reason, but no fresh clear fundamental drivers over the course of this week. Stock indexes downside again, due to close the week bearish. You can see the S&P, the Dow Jones, the Nasdaq, and the Russell. We're looking at that at the start of the week. Potential downside. There was a lot of headwinds for stock indexes over the course of this week, with the rising tensions in with the tensions in the Middle East. Couple that with, expecting, I was half expecting some positive earnings, which, some people were expecting not great earnings, but anybody who was expecting bad earnings have proved a little bit more positive. You see Alphabet sold off, Meta sold off, but Amazon and Intel over the last 24 hours have helped alleviate some stress a little bit. But when you look at bad earnings, and then it's like bad for companies, you look at good earnings, Fed keep the foot on the gas. I kind of thought it was a recipe for stock downside, which has come to fruition. We then had expected some strong economic data from the US yesterday, which again puts further pressure on stock indexes. So Dow Jones selling off in today's session so far, just a little bit at the open, but ultimately stock index downside over the course of this week. Bond yields, same story as the dollar. You started the week massive downside on Monday, chop sideways on Tuesday, back higher on Wednesday, back lower on Thursday, now you're chopping sideways today. Just a lack of clear direction. Volatile ranges though, like strong ranges with volatile moves, but ultimately a lack of clear direction. You're long into the one day, short into the next, long into the next, short into the next, and difficult trading conditions all around this week. Oil, bit of downside to begin the week, but ultimately it's chopped sideways since then. You had some, Israel were due to go into Gaza and invade on foot. That never materialized. They then pushed back on that, which caused a bit of upside for oil off the back of alleviating some stress in the Middle East. Then America go and the military get involved in Syria, hitting some Iranian targets, and then that kind of increased or heightened tensions again. It's a little bit all over the place. It's good, bad. Really, markets unsure as to what they want to do this week. So we'll let markets calm down. Not really too much out over the course of this week. You got Michigan consumer sentiment, the final figure. It's not the preliminary figure though. So economic data done for this week. Pretty choppy week. Volatile ranges. Some trades you could take advantage of, but ultimately, we were looking at stocks downside earlier on in the week. If you're on board with that, you would have made a bit of cash this week. But apart from that, pretty difficult trade over the course of this week. Next week, Fed out next week, but we'll cross that bridge when it comes to it. Release a video on Monday, have a look ahead to the week, and we will cross that bridge when it comes to it. But happy Friday, it's the weekend. Do recharge the batteries, get some rest and relaxation in, and we'll be back for another week of trading next week.